Receberemos hoje aqui no BTG Digital o Dr. Mark Mobius. Mark Mobius foi um dos pioneiros no investimento nos mercados emergentes, quando a gente nem ainda considerava os mercados emergentes como mercados emergentes. Hoje receberemos ele por uma breve entrevista aqui no BTG Digital. So, Dr. Mark, in the name of BTG and all the Brazilian investors who admire your job here in managing funds and giving advice for us in the investments. So I would like the first question, and I was curious, when you started really investing in emerging markets, I think the term of emerging markets didn't exist at that time. How different was investing at that time from nowadays? How do you find it different?
Very, very different, because when we started in 1987, there were only 6 markets we could invest. 5 of those were in Asia, and there was only 1 in Latin America, Mexico. All these other markets were closed to foreign investors, at least. So that's one thing. Now we're invested in over 70 countries around the world. The second thing is that the amount of money that was in emerging markets in 1987 was very, very small. It represented maybe less than 1% of the world market capitalization. Now, emerging markets represent almost 30% of the world market capitalization. So it's a big change.
And in terms of the companies, did you at that time, did you find any good companies compared to today, or was it really hard to pick up a stock on such a difficult environment on that time?
There were some good companies, but there were few of them. That was the problem, that we were, we had money to invest, but in order to find the right investments, the choices were very narrow because the few markets that we had. So it was difficult at first.
I think what investors in Brazil are really eager about right now, it's regarding the market timing to invest in emerging markets. What do you think about it?
I always say that the best time to invest is when you have money, because nobody can pick when you have a bull market, when you have a bear market. But we do know that bull markets last longer than bear markets, and bull markets in percentage terms go up more than bear markets go down. So if you don't know whether you're going to have a bull or bear market, which most people don't, then you're better off doing a systematic investing, maybe a certain amount each month into the funds that you like, and you should do fairly well.
And how do you see the recent performance of the dollar against the currencies of the markets and the companies you invested in? Because I think it's important variable to look into, the performance of the dollar. How you see it?
Well, we love situations like this where emerging markets currencies have gone down dramatically. You take, for example, the Turkish lira has gone down against the dollar by over 80%. And of course, as you know, the Brazilian real also devalued. So we love that because it gives us a chance to take our dollars and put them into undervalued emerging market currencies. So I think at this stage we're beginning to reach the peak of the dollar index. And I think from here on in, you're going to see many of the emerging market currencies begin to strengthen. So it's a very good time to be investing.
In terms of the strategy itself, well, we got to know lots of, now the passive ETFs are really taking over this market, this global equity markets. Even in Brazil, you find ETFs on our stock exchange. How your fund differentiated from other active funds, other active managers, and also ETFs? How do you differentiate yourself?
Yeah, it's very important what's happening because, as you know, with ETFs, you're buying the index. You're being very passive. So active managers like us have to be really active, really different from the index. And that's a good sign because it means that we'll have to do a lot more work to find the best bargains. But what we've done is, in addition to finding fundamentally good companies that are not necessarily part of the index, but we're also looking at the governance factor. In other words, we want companies that have an idea of looking at the environment, the social environment, and the governance. How do these companies treat shareholders? How do they govern? Are they very independent in terms of their board membership? Do they have independent board memberships? Do they have a friendly IR, investment relations situation where people know what's going on in the company? More transparency. So I think these are the things that we want to emphasize when we pick companies. And also we're taking an approach where we will engage with companies as partners, where we and the company management work together to improve the governance of the company. And I think this is going to be very, very beneficial to the share prices.
Also, in terms, of course, you are a mega investor and is always in the media, and Mobius Capital will be always your face at the door. But what you can say about your team and your partners in this endeavor that you're pursuing now?
Well, I have two partners. At the beginning, at least, we had two partners: Carlos Hardenberg, who's from Germany, and Greg Konieczny, who's from Poland. And both of these have terrific experience and performance in running emerging market funds. So these are very strong partners. In addition to that, we're bringing into the partnership the other analysts that we have in the team, so that we will really have an engagement for all of the members of the Mobius Capital Partners team. So everybody is really interested in succeeding and making sure that we help shareholders make money.
I think for us in Brazil, we have seen in the last years that Brazil was lag behind in terms of growth compared, for example, to other emerging economies, especially in Asia. How does Asia impact on your portfolio? How much you think the value will come from, especially these fast-growing countries in Asia?
Well, Asia, as you know, is big. They have many big countries. India and China both have 1 billion people each. So you can realize this is a big, big area. And then you have countries like Korea, Taiwan, Philippines, Thailand. Now Vietnam is coming up, Malaysia, Singapore, Indonesia. So these are all giant countries. And the interesting thing about the Asian countries is the growth rate. If you look at China and India, China is growing at a rate of about 6% in real terms. India is growing at 7% in real terms. This is very, very fast growth. And I believe that with the right policies, Brazil could do the same thing. Brazil, if they open up the market, reduce regulation, do more privatization of state-owned enterprises, Brazil could easily be reaching 6, 7, even 10% growth.
And all this growth, do you think it's already priced in on the Asian stocks that you're planning to buy, or do you think it's still room for value growth on this?
There's a lot of room because these Asian markets, because of the incredible performance of the US dollar and the US stock market, a lot of money moved into the US, then left China, left India. Now it's coming back. So these markets are down and they're beginning to recover.
What do you think, in your opinion, would be the main risk for the global economic environment that, of course, will impact the companies in terms of trade wars or Fed raising rates or a possibility of inflation in the US? Which is you think is the main risk now?
Actually, all these risks have another side. It's true that if you have a trade war between US and China, which you're now witnessing, it's not very good for China. China will be impacted. But you must remember that when you have this kind of situation, other countries could be benefiting. So the exports that are coming out of China to the US will move to Vietnam, will move to Turkey, will move to Brazil, and therefore these other countries will benefit from the negative situation. In terms of inflation and interest rates, I believe that the higher rates in America are already priced in. In other words, people have already anticipated this increase, and you have it in the market. It's already priced in. So when you look at the global situation, actually, probably what we have to be most concerned about is the impact of the internet, the technological impact in these countries, because many industries will be upset, will disappear as a result of the internet. So what we have to do is watch very carefully to see where the impact of the internet and technology generally will be important.
Yeah, in Brazil, we still, this is also very true. The companies are really, in all sorts of industries, are worried about the digitalization and the impact on the cell phone apps. In Brazil, you have more cell phones than people, so it's really an impact. In terms of Brazil itself, how representatives in your portfolio, and what do you think about the Brazilian companies that you are planning to invest in?
Well, one of the reasons why I'm here in Brazil is because of we're interested in the companies here in Brazil. We see there are lots of investment bargains. As you know, the Brazilian market is down, and in times like this, it's a good time to be investing. So we look to BTG Pactual to help us find the very best bargains.
That's great. I would like to say many thanks to Dr. Mark Mobius for this visit to Brazil, and we hope the Brazilian investors will share our optimism here and go investing not only in other emerging markets, but globally as a whole. Thank you very much for this. Thank you. Thank you.